think that's a very important point you raise. And if you look at the option market pricing, it's actually giving a far bigger event weight to the U.S. election rather than the Fed meeting coming up in September. And I really think that's the right approach for the market to be taking, because the U.S. election is going to be extremely consequential, both for economic and foreign policy over the next 4 years. And that will have dramatically different implications for the dollar. Under a Biden victory, I think the broader geopolitical approach of the U.S. administration would change. It would be much more favorable to international agreement, to international engagement. And if you think about the key driver of currency moves back in 2018 with the Trump trade war, the big driver was a weakness in global growth on the back of the risk of tariffs, on the back of using other tools, other economic tools and sanctions as geopolitical tools, and that weaken global growth. So if you get an administration that's more favorable to international engagement, it could be much more positive for emerging markets, much more positive for global growth, and that in itself could be negative for the dollar. So I think really the U.S. election is an extremely important event to watch.
George, I want to switch focus before we let you go to the pound. We've climbed above that 132 handle again, and we've really been in this territory, not been in this territory since February. What do you make of the levels? Because I noticed that you mentioned we might have run into a little bit of fatigue on the euro-dollar trade, and pound very much has tracked in these higher ranges at the same time the euro has. Are you also seeing fatigue in the pound trade?
Yeah, I think that's a very valid observation. If you look at sterling, it is very, very correlated to the euro. So we have just been through 6 months of very significant dollar weakness, and it's very natural to then see sterling appreciate. In relative terms, sterling has actually been an underperformer. So you have most of the best performing currencies in the world so far this year. They're all European: the euro, the Swiss franc, Sweden, Norway, Central and Eastern Europe. Sterling is really at the bottom of that pack, so it's really been dragged higher by a stronger euro rather than anything specific to sterling. But as we look towards the end of the year, I do worry about more sterling weakness. The economy is underperforming. You have the huge Brexit headwinds and the uncertainty associated with that, and of course the coronavirus, all hitting a twin deficit currency. So I wouldn't be getting too excited with sterling strength, and we've been recommending to clients to be selling sterling against other currencies, including the euro.